Something interesting has been happening across the financial markets. Bitcoin reached its high in October 2025. Then gold and silver reached theirs in January 2026. And since then, we've seen a progression of new highs across the US stock market. Take a look at this. This chart tracks several major US stock indexes. The Dow Utilities reached a new high in early April. The transports followed several days later. Then the Nasdaq 100 in June, the Dow in early August, and the S&P 500 several days later. Robert Prechter describes this in the August Elliott Wave Theorist as the fractured nature of recent market action. Rather than all these indexes reaching new all-time highs together, they've been doing it all at different times. Now, that doesn't tell us what happens next, but it does become interesting when you look at history. Around the major market peak in 2000, the Dow reached its high in January. The S&P 500 and Nasdaq followed in March, and the New York Stock Exchange Composite didn't peak until September. Then, something similar happened in 2007. The Dow Jones Composite peaked in July, while the Dow Industrials and S&P 500 reached their highs in October. That doesn't mean that today's market action has to follow either of those two periods, but it does give a historical reason to pay attention. And that's not the only development worth watching, because while all this has been happening, investor demand for stocks has been extraordinarily strong. Take a look at this. This chart shows the amount of new stock being issued in the United States each quarter. Why does that matter? Because companies tend to issue more shares when there's strong demand from investors who want to buy them. And in the second quarter of 2026, U.S. equity issuance reached a record $252 billion. That's even higher than the surge in early 2021. In other words, investors aren't exactly running away from stocks. They're showing an enormous amount of appetite for them. And nowhere is that enthusiasm more obvious than in technology. This chart tracks money flowing into technology funds. Each line represents a different year. And then there's 2026. Look at the difference. Through early August, investors have poured about $216 billion into technology funds. The inflows have absolutely dwarfed those of the previous years. That's not a survey asking investors how they feel. That's investors showing us how they feel with their money. And that's what makes this all so interesting. From Bitcoin to gold and silver to the major stock indexes, we've seen a progression of market highs. At the same time, new stock issuance has reached a record, while investors have poured an extraordinary amount of money into technology funds. Now, none of these developments tells us exactly what happens next, but when you consider them together, they're certainly worth following. So, what does this all mean for the markets from here? That's the big question. And these charts only tell part of the story. In the August issue of the Elliott Wave Theorist, Robert Prechter goes much further, examining the Elliott Wave patterns, Fibonacci relationships, and other evidence shaping his stock market outlook. That's where we'll stop. To see Prechter's complete analysis and stay on top of these market developments as they unfold, subscribe to the Elliott Wave Theorist.
Or try our flagship service that includes Robert Prechter's Elliott Wave Theorist, financial forecast, and short-term update for just $11 for a limited time. Go to elliottwave.com/11YT or click the link below.